Hi students, welcome to Sunil's tutorial. I'm Sunil Mirwani and today we'll be doing this chapter called as internal reco. We're going to do question number 10 today in the books of Umesh Limited. Right? Let's write the rules down. LAAL. Increase, decrease. Debit, credit, right? Let's start. They're saying that preference dividends was in areas for 1,20,000. The board of directors of the company decided upon the following scheme of reconstruction, which was duly approved by all concerned. The paid up value of equity shares to be reduced to rupees 50 per share, the face value being 100. At the moment, the value of equity share is 100. It is being reduced to 50 rupees. Reduce, liability going down. So this will be equity share capital account debit. Equity share capital account debit to capital reduction. Amount is going to be 50 rupees per share on 15,000 shares. Someone please calculate 7,50,000 being equity shares reduced. Right? Next, let's move on ahead. They've given you that preference shares are to be converted into 13% debentures of 100 each with regards to 80% of their dues, including the arrears of dividend, and for the balance, including the arrears, equity shares of rupees 10 each are to be equity shares of rupees 10 each shall be issued. Now they are saying that preference shares are to be reduced to now you don't have dividend with the balance sheet. So what I'm going to do is I'm going to break this up into two entries. One entry for preference share and one entry for the dividend. Preference shares are to be reduced. So this is going to be preference share capital account debit. Preference share capital account debit to capital reduction. Right? Preference share capital account debit, they are saying that preference shares to be converted to 13% debentures with regards to 80% of the dues. Debit what comes in, preference shares are coming in, and with regards to 80% of their dues. So instead of that, you are going to be issuing new 13% debentures. Debit what comes in, credit what goes out. Debentures are going out, therefore this will be on the credit side. 13% debenture account. Preference share capital account is 6 lakhs. Preference share capital account is 6 lakhs. They are saying that 80% of the dues. Some of these calculate 80% of 6 lakhs. 4,80,000. Yes. So that means 1,20,000 is going to be written off. You are taking in preference shares. Instead of that, you are issuing debentures, and the balance being written off being preference shares exchanged. Right? Next part, they are saying that 80% of the dues, preference shares to be converted to 13% debentures each with regards to 80% of their dues, including arrears and preference dividend, and for the balance, equity shares of 100 each shall be issued. So, okay. For the balance, equity shares shall be issued. You are not writing it off. You are issuing equity shares for the balance. For the balance, equity shares are being issued. Instead of writing it off, you are issuing equity shares. Fine, do we get this thing here? Now, let's come to preference dividend. Preference dividend is 1,20,000. So, you are going to be, they are saying that 80% of their dues are going to be given in terms of 13% debentures and balance in terms of equity share. But the problem is I don't have the word preference dividend in the balance sheet. So I cannot use it in the journal. So instead of that, I will write capital reduction. Capital reduction account debit to, you are going to be issuing 13% debentures. Debit what comes in, credit what goes out. You are going to be issuing equity shares. right? Now, preference share capital account, preference dividend is 1,20,000. Preference dividend is 1,20,000. Someone please calculate 80% of this. 80% of this, 96,000. Right? And this is 14, 1,24,000. Being preference dividend paid. Next, let's move on ahead. All equity shareholders agreed to pay the balance amount to make the shares fully paid up. Now we had made the shares. These are 100 rupee shares, and if you look at the first entry, they are saying that equity share, paid up value of equity shares shall be reduced to 50 rupees per share. That means I have to receive 50 rupees per share, right? Now how much is I have to receive that money? First let's write the journal entry. Bank account debit to equity share capital. Bank account debit to equity share capital. Now, how much is my equity share capital right now, guys? As per the balance sheet, it was 15 lakhs, out of which 7,50,000 has been written off. So 7,50,000 plus you have issued 1,20,000 plus you have issued 24,000. Someone please tell me how much is this?
8,94,000.
8,94,000, right? See, we'll do the working out here. Equity share capital was 15 lakhs as per the balance sheet, out of which you wrote off 7,50,000, you issued 1,20,000 and you issued 24,000. So someone told me that this answer is 8,94,000, right? These are shares of 50 rupees each. This 8,94,000 is considering that the value of each share has been made to 50 rupees. They are saying that the shareholders have agreed to pay the balance 50 rupees on these shares. 8,94,000 is the value, total amount I have received if I consider each share to be of 50 rupees. The shareholders are going to pay you another 50 rupees. That means they will pay you another 8,94,000 paid. Money is coming in. 8,94,000. 8,94,000 being call received. Right. Next, let's move on ahead. Plant and machinery to be revalued at 90,000. Now, as per the balance sheet, your value of plant and machinery is 70,000. That means the value of plant and machinery is going up, asset going up, capital reduction on the credit side. So this will be plant and machinery account debit to capital reduction. $90 and $70, 20,000 being plant and machinery revalued. Right? Next, let's move on ahead. The value of stock to be reduced by rupees 1 lakh. Land and building shall be written down to 15,50,000. And okay, let's just do those two together first. In both the entries, assets are going down. Asset going down, that means capital reduction on the debit side. So this is going to be capital reduction account debit to stock is being reduced by 1 lakh. Stock is being reduced by 1 lakh. Besides, they are saying that land and building shall be written down to 15,50,000. At the moment, its value is 19,50,000, so it is being written down by 4 lakhs. So land and building is being written down by 4 lakhs. This is 5 lakhs being assets written off. Next, let's move on ahead. creditors agree to forego their claim by 10%. Now, liability going down, capital reduction on the credit side. So this is going to be creditors account debit to capital reduction 10%. On 7,50,000, 10% is 75,000. Being creditors claim reduced. Right? Next, let's move on ahead. Loan was settled for 2 lakhs. Settled. Money is going out. Right? So this is going to be loan account debit. Leave a line to bank account. Now the balance sheet value of loan is 2,22,000. And they are saying that it is settled for 2 lakhs. So this is going to be to capital reduction 22,000 being loan paid. Right? Next, goodwill debit balance of profit and loss account shall be written off and cost of reconstruction of 5,000 was paid. Assets written off, capital reduction on the debit side. So this is going to be capital reduction account debit to goodwill to profit and loss right. Goodwill is given to you as 2 lakhs, right? And profit and loss is 38,000. 2,38,000 being assets written off. Last entry. Cost of deconstruction 5,000 was paid. Money is going out. I do not have the word cost of deconstruction in the balance sheet, so I cannot use it in the journal. Right? So in that case, this is going to be capital reduction account debit to bank. Amount is cost of reconstruction paid 5,000. Being cost of reconstruction paid. Right? Leave space for one journal entry and then make capital reduction account. Now let's see this capital reduction on the credit side. So you will write by equity share capital 7,50,000. Then on the credit side, by preference share capital 1,20,000. On the debit side, no, there is no capital reduction in that preferential. No capital reduction. Straight away you have the entry on the debit side, which is to 13% debentures, which is 96,000, and 2 equity shares 24,000. Then you have capital reduction on the credit side by plant and machinery. Plant and machinery is 20,000. Then you have capital reduction on the debit side. To stock is 1 lakh, and to land and building is 4 lakhs. Then you have capital reduction on the credit side by creditors 75,000. Then you have capital reduction on the credit side by loan. Loan is 22,000. Then you have capital reduction on the debit side to goodwill to profit and loss. Right? Goodwill is 2 lakhs. Profit and loss is 38,000. Capital reduction on the debit side to bank 5,000. Someone please help me tally this.
Credit side is 8,60,000 more. Difference is 4,000.
4,000. The difference is written as capital reserve, right?
Yeah.
Now, this is on the debit side. So in the journal, it will go on the credit side. So make a pass a journal entry for this. Capital reduction accounts debit to capital reserve. Amount is 4,000. Being reserve utilized. Right? Let's make a balance sheet for this. Liabilities, rupees, assets, rupees. Right? Now, let's see this. You have to look at the previous balance sheet and then complete the new balance sheet. Fine. Let's see the old balance sheet first. Now, let's see this. Authorized share capital. Question mark. Tally that off. Question mark. Issued and subscribed capital. Issued and subscribed capital. You have 10% preference shares. 10% preference share capital. Now, as per the balance sheet, your preference share capital is 6 lakhs. Right? The entire amount is written off over here. So, it's going to be nil. Then you have equity share capital. Now, equity share capital is 15 lakhs. Liability, rule, add credit, subtract debit. So, minus 7 lakhs 50,000. Then you have add 1 lakh 20,000, add 24,000, add 8 lakh 94,000. That's it. How much is that?
17 lakh 88,000.
17 lakh 88,000. Right? Next, let's move on to reserves and surplus. Reserves and surplus. Under reserves and surplus, you are going to have capital reserve. Capital reserve is 4,000. Then you have secured loan. Under secured loans, you are going to have, you have issued debentures. You have issued 13% debentures of 4,80,000 and then 24,000. So you have issued debentures of 5,04,000. Right, both are on the credit side. Those are only debentures you issued. That's 4,80,000 plus 24, 5,04,000. 13% debentures. 5,04,000. Then you have unsecured loans. Right? In unsecured loans, you have loans which
How
was
5 lakh 4,000?
5 lakh,
How 5 lakh 4,000?
4 lakh 80 plus another 24.
So that is equity share.
96,000. Okay. So
5 lakh 76.
5 lakh
76.
76,000. Okay. Loan. In this case, loan is going to be nil, right? Loan was 2,22,000 and you have 2,22,000 on the debit side. Next, you have creditors that will come in current liabilities. Creditors. Do we have an entry with creditors? Yes, 75,000. So 7,50,000 minus 75,000.
6 lakh 75,000.
6,75,000. That's it. Next, let's move on to the asset side. Fixed assets. Under fixed assets, you have goodwill. Goodwill is 2 lakhs, and you have goodwill on the credit side, 2 lakhs, so nil. For assets, the rule is add debit, subtract credit. Then you have land and building. Land and building is 19,50,000 and you have 4 lakhs on the credit side. So that's 15,50,000. Then you have plant and machinery. Plant and machinery as per the balance sheet is 70,000 and here it is on the debit side 20,000, so 90,000. Then you have investments which will be nil. Then you have current assets. Under current assets, you have stock which is 4 lakhs as per the balance sheet and you have 1 lakh written off, so that will be 3 lakhs. Then you have debtors. Debtors is 2,88,000 and we don't have an entry of debtors here. So that will be 2,88,000. Then you have bank balance. Bank balance is given to you as 1,26,000. Some of these go on adding and subtracting. You have bank,
8,94,000.
right? So you have 8,94,000 plus that is added minus 2 lakhs. Then you have minus 5,000. Some of these calculate and tell me how much is this? Some of these calculate 8,15,000. 8,15,000. Then you have profit and loss. Nil.
30 lakh 43,000.
30 lakh 43,000. 30 lakh 43,000. Right, that finishes that sum. We'll stop this here for the day. Thank you very much.